We're 2 hours into trading. It is Wednesday, July 7th. Hello, traders. Trying to take a little bit of time off. This is a great time to step away from the market, recharge your battery, decompress, get yourself ready for a busy session. These are the dog days of summer. We've got earnings season coming up in about a week or so. It'll start to kick off. Things will heat up then. Then as we get into August, it'll really slow down. So for those of you who are not subscribed to the YouTube channel, but you just come in every day and check, you may want to subscribe and you might want to turn on your notifications. Otherwise, you're going to get a little frustrated coming in each day and not seeing videos posted. I'm trying to take some time off. I suggest that you do the same. Great, great, great market for day trading and very, very short-term swing trades, but not a very good market for longer-term swing trades. We'll get into that in just a little bit. NIO, that was the last pick that I showed you, and that was actually from, gosh, almost a week ago, June 30th. And you can see the video came out here. I like to start all of my recordings with a recap of the previous day's trade. And you can see the video comes out here. Stock finishes pretty much where the video came out. The next day we get a nice little pop. But if the stock starts to retreat and it gets below your entry point, then you should be exiting the trade, especially when you get a gap reversal like that. We're going to talk a little bit about gap reversals. Since then, NIO has actually taken on a pretty bearish tone. There's your breakout right there, horizontal breakout, looks great. Now all of a sudden, that breakout has failed. That could prompt some additional downside selling. We want to take a look at the market. Let's get our bearings here. You can see the 1OP indicator, bearish cross from the open. I've been mentioning to everyone in my pre-open market comments. Incidentally, there's a link to my Twitter feed. If you want to follow me there, you can get the pre-open market comments every day. I'd mentioned, do not buy opening gaps higher to a new all-time high. That is a fade almost all the time. Your best bet is going to be to wait for that bid check, then to be looking for stocks that are strong relative to the market on that pullback. When we do finally establish support, that's when you want to come in and you want to nail those stocks that are moving higher when the market has been drifting lower. Yesterday, perfect example. Market opens, trying to eclipse the high from Friday. All of a sudden, we see steady selling. There's our bearish 1OP cross. So yes, we had nice, steady selling. We did have an early signal here on a 1OP cross right about here. So if you got in here, you've got to be a little bit careful because this could be a bearish flag setup here. Yes, you would want to be out here, take a small loss. Now we get a much better bullish cross right in here, right there. We also have some confirmation that support is in. This was a nice bullish hammer and it had follow through green bar, but we'd like to see a little bit better than that. And then all of a sudden we start to reverse and there's a bearish engulfing candle. So those are signs that you need to be a little bit careful. Down here, get this long red candle. We're not able to get through the halfway point, so you've got to be pretty careful in here, but you're starting to see a mix of green candles. That's excellent. Now all of a sudden we start to see, boom, they try and hit the bid, bounce back. They try and hit the bid, bounce back. Hit the bid, bounce back. Those are tails under body. That is a bullish hammer formation, and that is a sign that support is forming. Bullish 1OP cross, downward sloping trend line. Aha, long green candles stacked. This is a point where we can feel pretty dang good about getting into our bullish stocks. And then the rest of the way, we have very few pullbacks, nice little grind higher. There you've got a bullish flag formation. Looks like we're going to head south. We got a bearish 1OP cross. You can draw your upward sloping trend line right there, but we're not quite through it. So you got to be careful in here. Then you get a bullish engulfing candle right there. This is not what I would consider a good 1OP cross because we like to see it below zero, but in any event, that is a key candle right there. That is a bullish engulf. downward sloping trend line, follow through. Now you know we're going to be moving higher. We get through that resistance level. I'm trying to give you a feel for some technical analysis because it's critically important when you're trading stocks intraday. Also important obviously when you're trading futures. We get a bearish 10P cross, market gaps higher, up to a new all-time high. Careful, don't rush in. There is no reason to chase stocks right now at the all-time high. But Pete, the market keeps going higher. Yes, it does. But the opening is not going to be your best entry point, especially when we're gapping higher. That bid is going to be tested every single time. So you get this long red candle. Uh-oh, that's trouble. That tells you that we're going to be going south. You can see that is almost a bearish engulfing candle that takes out all of these previous candles. And you get your bearish 10P cross. So come down, fill in the gap. Ooh, couple of long red candles stacked. That tells you need to be patient. You need to wait for the setup. So here is your key bar. Every day, there's usually one or two really key candles throughout the course of the day. This right here, this long green candle, this is one of them. You've got your bullish 10P cross right here after a deep trough. You have a bullish engulfing candle. See how it engulfs that entire red candle? That tells you that the lows are in. And this is exactly what I mentioned to my members in the chat room a little more than an hour into trading today. Now you start getting some nice long tails under body, which indicates that when they try and hit the market rallies because there's buying pressure and that price bar closes near its high. And here we are off to the races trying to take out the high of the day. Let's go into a daily chart. Let's make sure that we can put the current price movement into context. And you can see we've got an upward sloping trend line here. Right now we are just about at it. And as we start getting above it, that means that we're getting overextended. So we need to be pretty careful in here. And I'm going to drop that trend line right there. You'll see that it extends. How high could this rally possibly go, Pete? Well, it really depends on a number of things. Light volume right now. We've got a lot of money coming into the market. In fact, $83 billion came into the market during the month of June. That's the highest level that we've seen since 2014. But we are getting fairly extended. How would I measure what that possible first target might be? 434 is a number that I'm coming up with. We're about 20 S&P points from it. It's where this candle comes into play. It also, if you take that high right there and that low right there, which is, I believe, about 11 S&P points, and if you add it, 11 S&P points to that high, you get up to about 436. Now we're making all-time highs, so you've got to have some metric that you can use to estimate how high you think the market can go. But I am seeing some things that are problematic, or at least question marks that I have in my mind. One of them is FXI. That is Chinese index. You can see I've got all sorts of alerts on this. That's a 200-day moving average, 50-day moving average, upward sloping trend line, breach to the downside. China's market is in bear market territory. China has a 10-month head start on a global economic recovery. They should be going absolutely gangbusters right now. This is the second largest economy in the world. Why are they floundering? What's going on? That is a big disconnect to me, and it is a big red flag. TLT. Off to the races. We're up to the 200-day moving average right here. We've got the FOMC minutes coming out in about 2 hours or so. Is the Fed going to be a little bit more hawkish? We saw the statement a month ago, and they are getting a little bit more concerned about inflation. They're moving their timeline forward for raising rates to late 2023. Market actually was relieved with that news because they thought it might be moved up closer than that. But why are bonds rallying? I mean, we're seeing a lot of inflation right now. Is this a flight to safety? I don't know. We are up against that 200-day moving average, QQQ. You can see how QQQ, because bonds have been rallying, interest rates have been falling. That's good for tech stocks. Tech stocks absolutely blew through that prior high. They are off to the races relative to the S&P 500. So tech has been a great place to be in the last 2-3 weeks. So I'm going to take a look at a number of different stocks. I am seeing some good shorting opportunities. Now, you don't want to be picking market tops. That's a great way to lose a lot of money. I'm not doing any longer term swing trades that span 3 or 4 weeks right now. I do believe the market bid is going to be decent through earnings season. And we've got earnings season coming up in a week. So I think that this is a nice little sweet spot for the market to float higher. We had a good jobs number last week, but other economic data points like ISM services that came out yesterday, this is the third consecutive monthly drop, but the number was still a very robust 60. So the numbers are good, they're solid, but they are not off the charts screaming higher like there is pent up demand that is just going to spark 8% GDP growth or something astronomical like that. No, economy's starting to recover. The numbers are very solid, but it's not what a lot of people were projecting. So I'm a little cautious in here. Anytime that we get to the upper part of this trend line, we start to see selling pressure like that. Got a couple of tails under body. I think we're going to continue to go higher for a week or two, but I am watching the short side and I'm seeing some good opportunities on the short side. And I typically see that when the market starts to get a little overextended. In here, I was starting to see some good shorting opportunities. Likewise, in here, I was starting to see some good shorting opportunities. So let's take a look at the short side. We can take a look at a few longs as well. And we'll go in and try and find our long of the day. First thing I'm going to do is go into my heavy selling search. So we've got a nice breach of horizontal support right here, downward sloping trend line. Stock is below the 100-day and the 50-day moving average. This is when. Brings up another question. Macau, China, gambling, economic recovery. If this global economic recovery is well underway, and if China has a 10-month head start on us, why the heck is Wynn Resorts going down? The vast majority of their casino revenues come from Macau, China. Doesn't make sense. To me, it's a warning sign. So I'm just concerned that the second largest economy in the world is struggling right now. I know a lot of it has to do with containers and shipping and supply chain disruptions. So shipping containers have gone up from about $1,600 per container to $11,500. They are unloading full containers in China because there are higher bidders and they're reloading them with those goods. Mattel and Hasbro are sitting on mountains of toys that are not going to make it to the US in time for Christmas. So that could be part of the problem. In any event, tread cautiously in this light volume market environment. Win, I like this short. You can see how the 200-day moving average is right here. I had shorted Win right out of the gate this morning. Did very well on it. Baidu, looking like a good short, breaking horizontal support here below the 200-day and 50-day moving averages. VLO, breaking down. Refiner, downward sloping trend line, horizontal support at the 100-day moving average, pretty easy breach. Now you've got an upward sloping trend line like this that's also been breached. So I think VLO also very nice short. Going to continue to go down. We're just going to take a look at some of the stocks. NIO I had mentioned earlier. AMD, that's actually been a nice long. Giving back a little bit right here, coming back below that technical was resistance, now support. It has fallen through that level. And I'm just going to click down and see if I can find a few other decent looking shorts. This is a nice little short here, BLNK, another Chinese company. Horizontal support right here. Stock below the 100-day moving average, below the 50-day moving average as well. So I want to make sure that when I'm day trading a stock or a very short-term overnight position, that I like this position on a swing basis. Once I've nailed that down, then I can look for entry points for day trades. So right now what I would do is I would be watching the S&P 500, which I do. I always have a chart tucked behind my primary chart of the S&P 500. I'm watching the 1OP indicator. Bearish cross right here. Bearish cross for 1OP. Does that mean that I short right here? No, no. This is telling me I've got to be careful with my longs and I should be taking profits up in here. It does not mean that I instantly flipped the switch and short. Yes, we are bumping up against resistance, so I'll be watching this point very carefully. Draw upward sloping trend line. I'd like to have that type of technical confirmation. When I do feel that the market is ready to roll over, then and only then will I consider shorting a stock like Blink. When would I want to short Blink? Well, I would want to take an alert line and I would want to connect it there and I would want to connect it there. Now, I don't have to watch Blink. I'm going to know when that upward sloping trend line is violated to the downside, and then if I get a good little market drop, this will be a stock that I know I want to short. Why? Because I've already done my homework. I know on a daily basis, this looks like a good short. Same with Wynn Resorts. Still got plenty of room down to the 200-day moving average. Stock has been weak relative to the market. Gee, look at there. Pete's already got an alert line drawn, ready for it to be triggered, which is going to trigger very, very soon here. That's how we trade. I like the stock short on a swing trading basis, but I don't want to swing trade on a short basis because the market is making all-time highs. However, there are opportunities for me to get short intraday. So this is what I'm trying to do, and I would use exactly the same type of approach on the long side. So when the market is dropping, what am I doing? Show me a stock that's higher. Show me a stock that's higher. Show me a stock that's higher. I want to see a stock that's moving higher when I get this type of market drop, because as sure as heck, as soon as I get that bullish 1OP cross, as soon as I get this bullish engulfing candle right here, those stocks are going to fly. They are going to fly. And if I'm wrong, and this is not the bottom, and the S&P decides to take another leg down, those stocks are going to hold up extremely well, and I'll be able to exit when that drop happens, maybe lose a few pennies, maybe even make money on them because they're so dang strong. They want to go higher. So let's take a look at the daily chart here, and let's go into heavy buying, and we'll take a look at some of the stocks that are at the top of the list. Amazon's been on the top of the list most of the day. So has Apple. Starbucks has been excellent also. And I'll give you a prime example of what I'm talking about. Here is Costco. Let's take a look at the daily chart. Oh, yeah. Costco opens, makes a new all-time high. Heavy volume. Yes, it has heavy volume. Okay, it's got relative strength. Orange line above zero. Excellent. Let's put on the SPY overlay. I could also just click this and take a look at the S&P 500. But here is the tell, and here is how you should be trading. First of all, I want to make sure that the stock is through the prior day's high. I have absolutely no resistance. Nothing in the way, no major moving averages, no major trend lines, not the prior day high. I want a clear path higher. Okay, this certainly qualifies with big volume. S&P 500, ka-chunk, ka-chunk, ka-chunk. Look at that drop right in there. And we know, based on my analysis, that there was more to come. As the market continues to come in and establishes that low, this is the kind of stock that you want to be buying as that 1OP indicator starts to drop like this. And let's say that you get in right here. Everything's starting to look good. That indicator's getting low. I can't wait any longer on Costco because this thing's going to blow. And so you get in early and the market drops. Look, you would have still made money because the stock is so dang strong. As you start coming into these deep troughs and you see the stock creeping higher, you know any kind of stall in the market sell-off, I'm not even talking about a rally, but any kind of stall in the selling is going to whoosh send this stock higher. Oh, lo and behold, you get a bullish cross and you get a rally in the market. See ya later. You never had to panic. You were early on the trade here, but because you were in the right stock, you had staying power. If you would have traded S&P futures and you would have bought futures in here and you get that next leg lower, you would have been stopped out for a loss. There's a huge advantage to trading stock, not the S&P 500. A huge advantage. That's what we take advantage of. So let's go through and see if we can find any stocks that I like. Actually, it's showing you TLT. I like a number of the stocks on the list right now. Starbucks actually looks pretty good. Downward sloping trend line, breach to the upside. It's not a real fast mover. Coming up on that resistance level, so not super crazy about it. Microsoft looks good. We've highlighted that before. Looking for something that's not quite as far out of the gate. Amazon also looks good, so I'm going to continue to just find something that looks good. And I'm looking for something that'll be good for today and something that might set up well overnight. This is a bullish flag formation, but I don't like this tail right here. I like this. There's your bullish flag. There's your flagpole. Looks fantastic. That is problematic. That tells you that there's been selling since the stock made the high. I would rather see a stock that didn't have this part of the wick right here, but just had this, an open here and a nice green candle. But this tells me there's selling pressure. Let's put up the 5-minute chart. And there you can see it establishes that high and it's been able to come down and check that opening gap higher. I think this stock probably goes down and fills in somewhere in here because series of lower highs. How can you be so sure, Pete? My gosh, this stock looks so good on a daily chart. What gives? Market up, 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 up. Oh, there we've got a win breach below the trend line. Stock not able to get off the deck. When we do finally get that S&P rollover, this is likely to break that support and it's likely to fill in that gap. So now that it's on my radar, I don't simply ignore it and move to the next chart. I drop my alert line so that I know when that critical support level has been breached because it may set up a really nice short for me. So I'm just looking through some of these to see if I can find a stock that I like. And I'm going to go to the daily chart because I want to start there, and I'm going to take the S&P off. And I'm just going to flip through and see if I can find something that looks good. Like the fact that this stock has been able to hold that gap and that support right there. This one could be taking off. I see something like that. I'm going to drop my alert line. Click there, downward sloping alert line. Tell me when it breaks out because that would be a bullish flag formation. Cisco riding that 50-day moving average, not too crazy about that. Some of the basic material stocks are starting to take off a little bit today, but I think that's just a little bounce. I do like Oracle. I mean, I really like these long green candles stacked with heavy volume. Let's take a look at the 5-minute chart and see what Oracle's doing today. There's your pick of the day. If you're going to be long, Oracle's the stock that you want to be long. Look at that relative strength. Orange line above zero. Really nice there. Excellent volume. Let's put up the SPY overlay just so that it's easier for you to see what's going on. Market down, 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 down. Oracle grinding higher. Fantastic relative strength. Oracle is your stock pick of the day. I wanted to give you a feel for how we trade, how do our day trades set up, the premise of looking for something that you like on a swing trading basis before you day trade it. And that way, if you get blindsided, and there we've got blink has breached to the downside. Let's take a look at some of these alerts. Remember that alert line that I drew? Aha! Now it's telling me that blink is ready to roll over, but I don't have the market rolling over yet. So I'm going to set another alert line, and I'm going to set it right here because I'd like another reminder. Could this be a good short right here, right now? Yeah, it could be, but I need to have the market decline. And look at this, we get two little red bars in here and then a massive long green engulfing candle. That's not good for shorting. This tells me the market's more likely to go up than down. And look how we're challenging the all-time high right here. So this is bullish. So no, I do not want to be early on my shorts. And I do not want to just get short because I've got two red bars in a row. I need to see some pretty decent proof that the market is going down, like multiple red bars that are long. That tells me that yes, we're ready to roll over. Otherwise, I'm going to be erroring on the long side, not the short side. And so in any event, BLNK looked pretty good. WYNN, I also had that bearish alert come up, and you can see how the upward sloping trend line was breached on that as well. So use the alert lines. Very, very important, very useful tool. And I'm just going to click on that and conclude the video. Thanks so much for watching. Please make sure to subscribe to the YouTube channel. I'm going to be taking a few days off here and there. When you turn on your notifications, you're going to know each time when I've posted a new video. ORCL Oracle, that is your bullish pick of the day. Watch for a little bit of a market pullback in here. We're about 3.5 hours into, or 3 hours into trading. Thank you. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.